Good afternoon and good morning to everybody. My name is Thomas Hucke and I'm the CEO and founder of Asia Frontier Capital. I would like to thank all of you for your interest in today's AFC webinar focusing on investment opportunities in Uzbekistan and Vietnam, jointly organized by Asia Frontier Capital and Loretan Consulting from Zurich, Switzerland. First, we will have Scott Usherhoff joining us from Tashkent, and he will talk for approximately 15 minutes about the investment opportunities in Uzbekistan, a stock market which is in our view still overlooked by international investors for various reasons. One of them, for example, is that Bloomberg still doesn't publish the stock prices of the Tashkent Stock Exchange on its terminals. But we expect that will change soon when Uzbekistan will become part of the Msci Frontier Index, which the president of Uzbekistan wants to achieve by 2025 latest. Thereafter, we will have the opportunity to listen for about 15 minutes to Vicente Nguyen, who is the fund manager of our AFC Vietnam Fund. Vicente is based in Ho Chi Minh City in Vietnam. Thereafter, we will answer questions from the audience. You can submit your questions anytime during this webinar using the Q&A tab on the bottom of the Zoom window on your computer screen or mobile phone. I will read them out during the Q&A session. All the participants of this webinar will be automatically set on mute during the entire webinar, and your questions and names cannot be seen by other participants. So let's go. Started now with Scott Usherhoff, the Chief Investment Officer of the AFC Uzbekistan Fund, who is based in Tashkent, Uzbekistan.
Thank you, Thomas. Hello, everyone. All right, so the way that I will structure this discussion is I'll start talking about Uzbekistan from a macro perspective and then work my way down to talking about the opportunity that we see on the ground. So a few quick facts about Uzbekistan. Uzbekistan is the geographic heart of Central Asia. It's one of 5 stands. It's also one of 2 double landlocked countries in the world, the other being Liechtenstein. Its population is roughly 35 million, and for size comparison, it's approximately 1.2 times the size of Germany and roughly the size of California. And in 2017, it was rated the 5th safest country in the world, according to a Gallup poll. So a bit of recent history. Uzbekistan is a former Soviet republic, and it was pretty much run as such until 2016. It was run by President Islam Karimov from 1989 until his death in 2016. And his prime minister at the time, Shavkat Mirziyoyev, who was prime minister from 2003, was elected president in December 2016. And everyone thought he was going to maintain the status quo. But in fact, he actually decided to open up the country and initiate radical free market reforms, which he announced in February of 2017, which included, among other things, reforming the judiciary, establishing a foreign policy, introducing a social safety net for the population, etc. Then in September of 2017, the Uzbek Sum was unpegged and it was devalued by 48%. This was in a bid to eliminate the black market exchange rate and bring the two in line. And today there pretty much is no black market exchange rate. It's the same as the official rate. So they were successful. Then in February of 2019, jumping ahead, Uzbekistan launched its maiden sovereign bond. And in March, they eliminated capital controls for all foreign investors. And this gave us the impetus to launch the Uzbekistan Fund in March of that year, at the end of March. Then in August, the central bank officially floated the Uzbek Sum. And in September, they allowed foreigners to freely purchase shares in banks. So one thing that really attracts us to Uzbekistan is its comparison with Vietnam. Vietnam was a closed country until 1986. Then they announced the Doi Moi reform to transition the country to a market-based economy. And over the next 30 plus years, this led Vietnam to become the 3rd largest economy in Southeast Asia and the world's 2nd largest exporter. So Uzbekistan has a lot of the same ingredients as Vietnam. Some of them include a very large industrial and manufacturing base. Uzbekistan has the largest industrial base in all of Central Asia. Steel, glass, cement, textiles as a result of it being the 6th largest cotton producer in the world, and agriculture. Not cash crops per se, that's more Kazakhstan, but Uzbekistan is the horticultural breadbasket of the entire region. It has pretty much the periodic table when it comes to resources. It has oil, natural gas, gold, silver, uranium, manganese, tungsten, etc. And it has the largest population in the region of roughly 35 million. And minimum or labor is very, very cheap. Minimum wage is approximately $55 US, but realistically, the average unskilled laborer will be receiving somewhere around $100 US equivalent. So on the left, I have a GDP chart, and historically, Uzbekistan's GDP growth has been north of 5%. Then it slowed down in 2017 as a result of the opening of the economy and the unpegging of the currency. And today, GDP is roughly $58 billion US. In 2020, the country grew by 1.6%, and that's a result of the country doing a very good job of handling coronavirus. There were 2 lockdowns, one in March and one in July of 2020 for approximately a month each. And besides that, the country's been open ever since. There are no restrictions on coming to Uzbekistan. Bars, restaurants are all open. Schools are all in session, universities as well, in-class teaching. So this year, the Asian Development Bank estimates 4% GDP growth, and next year, 5% GDP growth. And on the right, I have a chart of GDP per capita, which is roughly $1,700 US. So on the left, I have inflation and the central bank policy rates. The central bank policy rates, or I guess talk about inflation first. So when the currency was unpegged in 2017, inflation jumped into the double digits. And the goal of the central bank has been to bring inflation back to 10%, where if you look at statistics, say from relative to the black market, inflation historically has been in the teens or in the 20s. So the goal is to bring it realistically down to 10%. And since the country opened, as you can see, official inflation has been in the mid-teens. Now it's coming back down towards 10%. So last year, inflation was roughly 11% for the year. And the policy rate decreased from 16% down to 14%. Now, looking at Uzbekistan, the currency has historically always depreciated, especially when you look at the black market rate, since the currency historically was pegged. And in 2019, the currency was down 14%. Last year, it was down 10%. But this year, it's down 1% year to date. So if we extrapolate that out for the entire year, we're looking at something around 2% depreciation. And potentially, the currency could appreciate as inflation comes down based on the right side, the balance sheet of the country. Uzbekistan has a very fortunate position. It has the largest open pit gold mine in the world, and it is a very large gold producer, 6th largest in the world. So their foreign exchange reserves are roughly $34 billion, and $22 to $23 billion of this is gold. And they sell when the price is opportunistic for them to sell. Comparatively, their external debt is roughly $33 billion US, the vast majority of which are soft loans, long duration, low interest rate, which is why you can see that their debt really ticked up in 2020 as they were taking advantage of Corona crisis financing and whatnot. As I mentioned before, Uzbekistan is one of 2 double landlocked countries in the world, so logistics is terribly important. And when you look at the Belt and Road Initiative from China, on the land route, Uzbekistan is regarded as the quote-unquote buckle in their initiative. And the reason is because Uzbekistan enables China to build a transit corridor to Europe, circumventing Russia. And the heart of that transit corridor in Uzbekistan is based in the ancient Silk Road city of Samarkand. So Uzbekistan right now is focused on increasing its logistics capabilities. And right now it's in discussions with China and Kyrgyzstan to build a railroad through Kyrgyzstan to be able to circumvent going through Kazakhstan. They're talking about accessing through Turkmenistan, the Turkmenbashi port on the Caspian Sea, and then also being able to have connectivity down through Iran into Turkey. Further, earlier this year, Uzbekistan gained access to the Gwadar port in Pakistan. So these are some of the brands that are currently, or some of the companies that are currently working in Uzbekistan. And on the retail side of things, regarding consumption, when we first came here in 2018, there was one modern mall in the country. Now in Tashkent, you have 8 malls under varying states of construction and a handful of others being built in second-tier cities. So as you have more modern retail come about, no doubt a lot of these consumer brands will expand. And Starbucks is expected to enter the market in the first half of next year. So the Tashkent Stock Exchange. The Tashkent Stock Exchange was founded in 1994 for the same principle as what happened in many post-Soviet countries, and that was to privatize the vast majority of the economy, the state-owned enterprises. So today there are 136 companies listed. The market capitalization is $6 billion, and the exchange is 25% owned by the Korean Stock Exchange, who provides the software and the technology and the online trading platform, and the balance is owned by the government. For reference, this is the historical market capitalization of the exchange. And as you can see, when the country opened in 2016, or since it opened in 2016, the market is up roughly 600%. So now I'll get into some of the companies that we have in our portfolio. Kizilkum Cement is the largest cement producer in the country. Tashkent Vino is the largest consumer goods conglomerate in the country. And then the Uzbek Commodities Exchange is a blend, if you will, of, say, the Chicago Board of Trade and the London Metals Exchange. But before I get into our top 3 holdings, I want to mention that the AFC Uzbekistan Fund is the first foreign fund to be solely dedicated to Uzbekistan. And since we started 2+ years ago, there's been interest among others to create funds, which of course would be competition, which means we're doing something right. And locally, there are a handful of people that are trying to start local funds to participate in the market. And as a result, it's become more and more competitive to acquire shares in the market, simply because there are more people around relative to when we started buying shares here nearly 3 years ago. And one of the benefits that we have is very good relationships on the ground, both through brokers, but also through listed companies. And this has enabled us to acquire a large portion of our portfolio through block transactions. So Kizilkum Cement is the largest cement producer in the country. It has 3 dry process production lines with capacity of 3.1 million tons per year. And earlier this year, they started construction on a 4th line with 1.1 million tons of capacity. At present, Uzbekistan imports roughly 3 million tons a year. And there's more capacity being built in the country, which doesn't really worry us, because if you look at what's happening here, Uzbekistan is undergoing its first real construction boom since the collapse of the Soviet Union. They need humongous amounts of residential real estate. They're building new cities in certain areas. They're expanding the railroads. They're building and repairing existing roads. Of course, office buildings, shopping malls, etc. So cement demand is likely to continue to grow, and it will be able to absorb a lot of the supply that's going to come online over the next decade. Though at the same time, Uzbekistan has a strategic or competitive advantage when you look at its southern neighbor, Afghanistan. Afghanistan consumes roughly 7 million tons a year of cement, and the southern half of the country is supplied by imports from Iran and Pakistan. But the northern half, specifically around the city of Mazar-e-Sharif, it's logistically uneconomic to bring Iranian and Pakistani cement there. So Uzbekistan has a monopoly on supply cement to the northern part of Afghanistan. And over the next few years, there are plans to build a railway from Uzbekistan down into North Afghanistan over into Pakistan, which will both provide Uzbekistan easier connectivity to the Gwadar ports, but also all of this construction is very likely, especially on the Afghan side, to be built using Uzbek cement. Tashkent Vino, they're the largest consumer goods conglomerate in the country, and they produce beer, vodka, juices, dried fruits, and they have a production line for flash frozen vegetables for export. What really excites us about this company is that it gives us both leverage to increasing consumer spending, but also that the government is planning to privatize 51% of the company, which is their entire shareholding in it. And that gives the opportunity for a multinational to come in and take control of the company and really take it to another level. And the best comparable, if you will, would be a company called Apu, which is the largest alcohol producer in Mongolia, which a few years ago, Heineken took majority control of. And lastly, the Uzbek Commodity Exchange. As I mentioned, it's a blend, if you will, of the Chicago Board of Trade and the London Metals Exchange. Further, there's a platform for government procurement and license plate and mobile phone trading, or the trading of mobile phone numbers. And the company over the past few years has seen the government require more and more commodities be traded through it in order to increase transparency of the trading of these goods. And this is expected to continue to happen. Specifically, over the next few years, the plan is for the government to onboard oil and gas condensate for trading, as well as for the commodities exchange to start the introduction of derivatives and forward trading, which will enable for both hedging, but also speculation, which means more revenue for the commodity exchange. So, Thomas, I'll pass it back to you.
Thank you, Scott, for your interesting and insightful presentation. Again, if any of the listeners want to ask a question, you can do that by using the Q&A function at the bottom of the Zoom window on your computer or mobile phone anytime during this webinar. Our next presenter today is Vicente Nguyen, the fund manager of the AFC Vietnam Fund, who is based in Ho Chi Minh City, also commonly known under its old name, Saigon. Vicente, over to you.
Thank you very much, Thomas. So good morning, good afternoon, good evening, ladies and gentlemen. I am Vicente, the fund manager of AFC Vietnam Fund. So I'm very happy to share with you about the outlook of the economy and our fund investment approach. So as you know, Vietnam is one of the best countries in terms of controlling the COVID-19. So in the first quarter of 2021, the listed enterprise earnings from more than 80%, and they are expected to grow higher in the second quarter because the second quarter last year was the bottom of the economy growth. Government is supporting the economy with their stimulus package and is expected to support the economic growth this year. We also see the strong FDI into Vietnam and the production switch from China to Vietnam to avoid a tariff due to the trade war between US and China. GDP growth of Vietnam is expected to be around 6 to 7% in this year. Actually, this is one of the fastest growing economy all over the world. Last year, we hit 2.9%. We surpassed China and became the fastest growing economy during the COVID-19. In terms of the long term, we completely confident that Vietnam continue to be the fastest growing, one of the fastest growing economy in Southeast Asia. Recently, we just surpassed Singapore and Malaysia to be the third largest economy in the region. The FDI inflow continue to support the economic growth. Together with a lot of FTA, Vietnam has signed with a lot of economic union like European Union's Vietnam Free Trade Agreement. And the trade war between US and China will bring a lot of FDI into Vietnam to produce, to benefit the free trade agreement between Vietnam and other countries and to avoid a tariff between China and US. Vietnam Dong is the national currency is expected to remain very stable in the next few years. Actually, in the last few years, Vietnam now is one of the most stable currencies in over the world. So we strongly believe and confident that Vietnam economy's outlook will be very bright in the next 3-5 years. Regarding to our top 5 holding, so in our top 5 holding, the total weighting of our top 5 around 27% of the whole portfolio, and the average trailing PE is 11.4, but the forward PE is expected to be below 10 because of the strong growth of the earning this year. As I mentioned before, the listed companies earning from 80% in the first quarter. So our portfolio also jumped, and actually the average earning growth of our top 5 holding in the first quarter hit 185%. The portfolio PE is right now is only 8.8 compared to 16.9 of the whole market, so it's quite undervalued and cheap relatively. ABI is the fastest growing and the most effective insurance company in Vietnam in the last 5 years, and you can see the net profit grew at 29% during 2015 to 2020. ROE of the company reached 28% in 2020. This is the highest level in the sector. The PE of the company is only 5.4, PP is 1.4, and particularly the cash balance of this company nearly double its market cap at the moment. VPP is Vietnam Prosperity Joint Stock Commercial Bank. VPP is the second largest private bank in Vietnam and is also the largest micro consumer lender. The net profits grew very fast at 34% in the last 5 years, and ROE of the bank also reached around 20% in 2020. PE of the bank is 14.5 and PP is 2.7. And as you know, that VPP just sold their 49% is a subsidiary FX Credit. It's the FX Credit is the largest micro consumer lender in Vietnam to Sumitomo, to the valuation of $1.4 billion. In the first quarter of this year, the net profit of the bank also grew at 38.4%. The next one is VND. VND is the third largest security broker in Vietnam. The net profit grew at 30% in the last 5 years, and ROE of the company is around 18% in 2020. PE is 12.5, PP is around 2. Particular, you can see the net profit jump up more than 700% in the first quarter of this year to reach 500 billion Vietnam dong. This level is equivalent to 50% the year target. So we think that the company is easy to overcome its year target. Foray Joint Stock Company. Foray is one of the largest furniture exporter in Vietnam. And as you know, that Vietnam just overpassed China to become the largest furniture exporter to US. And we are also the number 6 exporter to US. The net profits grew at 15% in the last 5 years and ROE is around 19% in 2020. PE is around 10, PP is 1.7. And in the first quarter, because of the charm in its furniture exporting, so the net profit of the company grew at 54%. Another one is also the last one, and this position I would like to share with you about the real story. This story really describes how we invest into a position in Vietnam. This is Linh Việt Post Stock Commercial Bank. So we entered the stock in 2017. So after we bought the stock price goes up sharply in 2018 before it collapsed in the third quarter of 2018. At that time, you know, in Vietnam, there were a lot of rumors around the stock that Okay, the bank has very bad asset quality, so it might be strictly controlled by the state bank or even face the bankruptcies. So at the time, what I really did, I just called my friend and used my local network, my local understanding to call my friend who are working for other banks at quite high position. And they said, no, Limpid Post Bank, they are doing quite well. You should check. It's not like the rumor. And after that, I tried to set a meeting with the CEO, and finally I got it. At the meeting, the CEO said, in 2018, we expanded the business aggressively. We opened hundreds of new branches around the country. So we have to spend a lot of money for investment, for marketing, and for attracting the new clients to the bank. A reason why the profit in 2018 will decrease sharply, but you will see the profit will recover very strongly since 2019, 20, and 21. And what he said was correct. We decided, after the meeting, we decided to triple our investment. We increased our investment into this bank 3 times. And as you know, after 2 years, the stock's price started to go up, and right now we make nearly 200% profit in this stock, and it's become the second largest position in our portfolio. And we strongly confident, believe that the bank is still undervalued based on the growth of the bank. Right now, Limpid Post Bank is the second largest bank in Vietnam in terms of number of branches. Just after Agriculture Bank is just a state-owned, 100% state-owned bank. So it's quite bureaucratic, not dynamic, not very active. Everything is slow. So Limpid Post Bank is a private bank. They are much more dynamic. So their strategy is very niche. You can see that they focus on rural area where 70% of the population live. This is what really the CEO told me. He said that Limpid Post Bank is just a very young bank, around 10 years old at the time I met him. So we cannot compete directly to other bank, other big bank, old bank already. They have their own market share and client base at a big city. So we have to focus on where the market is bigger and less competitor, only agriculture bank. So this strategy was completely correct. Even though we are talking about fintech all over, where we're talking about internet banking, yes, absolutely. The Limpid Post Bank also invested in internet banking and apps and other things. Even they have a mobile payment wallet. So, but in the short term, the number of brands still, how to say, significant to increase the profit. So it's so that what they did is completely correct. The net profit in 2018 decreased sharply, but after that it's recovered very strongly, and it's come up gradually year by year. And into 2021 at the AGM, last month, just a few days ago, the CEO said at the AGM, he said, okay, the year target is 2,600 billion net profit, but they are very confident to overcome this target, because only in the first quarter, their net profit already grew 80% compared to last year. And as I said before, in the second quarter, I think the profit of this bank will be grew at a higher growth. So this successful story is one of the story we invested into Vietnam, and it is really described exactly how we use our network, our local understanding, beside the financial ratio, everything. And recently we put into our investment strategy, our investment across ESG. So half year ago, we decided to to add ESG rating in our portfolio valuation whenever we want to invest into a new position, or even we want to increase investment at any position or reduce or exit. So because we think that ESG is very important for the countries, for the people, they good for the environment, for the community, for social, for kids, and even for the shareholder, because they care about the governance. So as a local people like me, I think this is completely good. So when we started it, I was really convinced, and we try. Even we are very first step. We are newcomer in this field. It's quite new for us, but we researched and we did. So finally, we evaluate the whole portfolio, and we have the rating. And based on the rating, we will decide it. Okay, as I said, increase or reduce or exit an investment. So ESG is not only good for the country and people, but I think it's also good for the portfolio, for the fund. Many research already proved that, okay, a fund with the ESG rating, with ESG valuation, we have a better performance. And there's thousands of research about it. One of the company I want to show you about our ESG valuation is REE, REE. Is one of the largest power manufacturer provider in Vietnam. So around 5 years ago, they run a lot of coal thermal power around the country. And you know that this is completely polluted. But they transform dirty power factory into the green energy. So a few years ago at the AGM, they already make a 5-year strategy that they will enter, they will try to complete exit the coal thermal power and invest into the green energy. So they will invest roughly 550 megawatts into the renewable energy, including wind power, solar power, and hydropower. In terms of social, every year they contributed around 0.4, 0.5% their net profit for the community, and they paid quite good salary for the employee. This is good for the country and good for the people. They use the money to build a school, to give the scholarship to the kids, and even their staff often organize some campaign to donate their blood. Yes, donate their blood. This is completely good in terms of the image and good for other people. In terms of the governance, REE is one of the first pre-listed company in the stock market, and every year is rewarded to be one of the best IR company in Vietnam. They run their IR activity completely good. And last year they were priced one of the top 50 best company in the stock market by Forbes. So they are really good. We would like to increase their investment. So thank you very much. I would like to give it back to Thomas.
Many thanks, Vicente, for this interesting presentation, and what an exciting story about Lien Viet Postbank and also your focus on ESG. We will now go to answer some of the many questions we have already received from the audience, but don't ask only about Uzbekistan, because 95% of the questions so far we have received is about Uzbekistan. So give also some challenge to Vicente. And you still can submit, of course, more questions during the Q&A session. Okay, so Scott, now you need to work hard. Scott, you mentioned similarities to Vietnam. How much FDI are we seeing, and is this going into exporting industries?
So the vast majority of the FDI in this country, which is around, say, $5 billion, the vast majority of FDI is going into, right now, the oil and gas industry. It's very easy to tick off $1 billion there. Some of it's going into expansion of a gold mining operation, which is part of a company called Navoi Metallurgical Mining Company, which is slated for international IPO. A very large local steel producer, the same. But no doubt, I'm meeting people on the ground that are coming from Pakistan, India, that are building pharmaceutical factories here for the production of generic pharmaceuticals. You're seeing slowly but surely some people come here to build textile factories. Certainly the real estate is booming. There's a lot of Kazakh, Turkish, there's some Americans that are doing business here, building hotels, building apartment buildings. So it's a blend, but it's still very much early days.
Okay. Next question, Scott. What happened recently to Toshkent Vino? Big crash, apparently. But first a big rise as well.
Yeah, so there was a 10-to-1 share split, and then I assume local investors came and created a rather phenomenal rally where the stock price at one point was up 176%, and the split happened on the 6th of May. So now we're pretty much, flat with where we were around the share split, a little higher than where we were. So call it a healthy correction, and one that's much needed.
Yes, that's right. Again, Scott, what is the cost of gold extraction in Uzbekistan?
The cost of gold production?
Yes, extracting gold in Uzbekistan, yeah.
So it's not disclosed, but my understanding is that Muruntau, which is the largest open pit gold mine in the world, has somewhere around 4 grams per ton of gold. And being that it's open pit, not underground, and with how cheap labor is, again, it's not disclosed, but my assumption would be there's a very healthy margin with where current gold prices are.
Yes. And in general, we need to add that the whole Uzbekistan is in the middle of a huge gold belt stretching from Uzbekistan, Tajikistan, Kyrgyzstan, northwestern part of China into Mongolia. Then another question, do you expect a big influx of foreign capital into Uzbekistan? If so, when would you estimate that to happen, and what will drive it?
The seeds were being sown for it to happen, say, right now, but then coronavirus stalled everything. One of the big challenges is that 6 months ago, it was much harder to get on a plane and come here. It's still not easy to travel and whatnot. But again, Uzbekistan is open for pretty much every country. But I'd say that is probably now pushed back, say 2 to 3 years. The global economy has definitely changed the dynamics behind it, or what's driving it, especially in the West. But I think over the next, say, 2 to 5 years, you'll start to see more foreign investment flow into the country. And that's going to be on the back of people that were preparing to come here will come here inevitably, but also is they start to digitize the process of license applications and slash a huge amount of the Soviet-style bureaucracy, which needs to go anyways. And it gets easier to do business here. It will probably instigate a rush of FDI here.
Yeah, then another question, more or less same direction. Questions to Scott. Number one, what are the biggest challenges for Foray investors on the Tashkent Stock Exchange today, and how will this be addressed in the future?
I don't think there really are that many big challenges. I mean, historically, I guess probably the biggest one would be finding large quantities of shares to buy, which as a result would be lack of liquidity. And when we first came here, there was not much liquidity, but luckily we were the funny foreigners in the room that were buying shares at once in a generation prices. Companies were literally growing 400 or 500% year over year in 2018, and they were trading at PE multiples of 1, 2, 3 times, and in some cases dividend yields up to 50% for a vegetable oil crusher that we bought a position in. So that type of those bargains are no longer here. There's still plenty of bargains, but liquidity is an issue. And the way that's going to be resolved is with the government's privatization plan. We always looked at Uzbekistan as sort of being a multi-stage opportunity. One was to buy cheap companies that are growing fast, which are going to be the quasi-blue chips. Then the government, hopefully, and they've announced last month a vast privatization program to privatize a whole lot of state-owned enterprises. And this will create liquidity both in new names and existing names that are listed. Once this happens, you get a proper revaluation and you get more capital, foreign and local, to come into the stock market here. We think this will kickstart a local private sector IPO boom, because a lot of people here, a lot of companies in really greater Central Asia, it's the same issue. The only way to get financing is through a bank. But if you're able to provide any type of collateral, it's going to be land, and you're still going to be paying 25 to 30% per year in interest. So a lot of companies don't have much, if any, debt. And once the stock market is better functioning and there's more liquidity and there are more investors, we think that's a massive opportunity here.
Okay, then Vicente, soon you have also 1 or 2 questions, but first here, 1 or 2 for Scott. What is the pipeline of IPOs of major state-owned companies on Tashkent Stock Exchange?
So the pipeline is, say, between now and 2023, 2024, the government plans to, we'll say, IPO/sell down their ownership stake in many more companies than I'll mention, but they plan to IPO Uzbek Airways, the large Navoi, the gold company, that is going to go for likely a dual listing, I'd imagine, in London and then Uzbekistan. Then there's a company called Al Malik Mining, which is a very large copper and silver producer, and then they have some gold as well. They're being restructured to go for international and presumably locally listed IPO as well. The largest steel producer in the country, Uzmet Kombinat, which is one of our top 5 holdings, is slated to go for international dual listing as well, and a handful of others. So between, say, next year, if you will, and 2023, 2024, there should be a lot of exciting privatizations if they keep on schedule.
Yeah, but one thing is also important to say, oil and gas, because Uzbekistan has a lot of oil and gas that will not be made available to the public yet for the time being. It's a core asset of the government. Then another one, a little bit from a different angle. Is it possible to arrange a visit to Tashkent in next month or so?
Certainly, I'm here, and if any of you are able to make it to Tashkent, I would love to meet you in person.
And so, yeah, you need to mention there's no COVID restriction, for going into the country.
If I may, the only restriction is you have to have a negative PCR test to get on the plane. Once you arrive, there's nothing. There's no quarantine. You're free, if you will. So it's very easy once you get here.
Okay, now Vicente. In Vietnam, are there any industrial parks that are interesting for the fund?
So actually, first on the stock market, there are a few industrial park companies listed on the stock markets, like KBC, SSC, or SSL. So they are on the market, so you are easy to buy the stock. In case you want to cooperate with them to build another industrial park or something, you just send them a proposal and work with them. Actually, because in order to invest into a new industrial park, they need a lot of capital. So normally they will try to raise capital from outside. So actually, there are a lot of investment opportunity in this sector.
And another question for you again, Vicente. To what extent does the Vietnam Fund value dividend income when choosing investments?
Actually, when we choose any position to invest, we use our bottom-up method. So we will check on the financials ratio of the company, balances, the PL statement, the PE, PP, and of course including the dividend yield. So in Vietnam, it's a growing country, so most of the company they allocate most of their profit into the reinvestment to expand their business. So dividend is not really high, but you can see our whole portfolio dividend yield is right now is 5%. Yeah, 5% in US dollar terms is quite high compared to the whole markets. Is whole markets here is mean Ho Chi Minh City is 1.3%. And compared to other countries like Singapore 3% or Philippines 1.8 or Indonesia 2%. So our portfolio dividend yield 5% is quite high. Actually, yes. we do not, how to say, really focus on dividend yield because we prefer to choose the growing company than a high dividend yield, but somehow it's so very high dividend yield in our portfolio. Yeah, maybe lucky.
Yeah, that's great. Yeah. Then another question: do you invest solely in Ho Chi Minh City Stock Exchange or also in Hanoi?
Yeah, actually, in our portfolio there are more than 40 positions, so roughly 8% on Ho Chi Minh City Stock Exchange and 20% is in Hanoi. But most of the stock in Hanoi is mean on Upcom. They are bigger market cap. Because Hanoi Stock Exchange, most of the company are quite small. Ho Chi Minh City is much bigger.
Then, which sectors will be the most profitable in the next 5 years from your point of view, Mr. Vicente Nguyen?
Okay, so as in my point of view, I think because Vietnam will benefit a lot in terms of a lot of FTA that they already signed with other economic union and the trade war between US and China. So we will attract a lot of FDI into the country. So which kinds of industry will be benefit from this trend? First, we have to say, because they will export a lot, so port, shipping company, logistic company will benefit, absolutely. And the manufacturing, so when they produce or set up a factory in Vietnam, okay, they will need the supplier. So other company, those supplier will benefit. And of course, like the previous question before, industrial park. According to my knowledge, the rental price are nearly double in the last 12 months.
Then a question to both of you. Where is it? Oh, are you hedged in either fund, especially concerned in Uzbekistan? So, yeah, basic question is the answer is no in both cases, but maybe you want to go into details.
Yeah.
Yeah, it's basically very expensive to hedge the currencies because it's the interest rate differential between US dollar and Vietnam dong, and like in Vietnam and also in Uzbekistan, as you heard from Scott, we believe that the currency right now is in both countries is stable, and it's not worthwhile to hedge it for the time being.
Okay, in my view, in Vietnam, it's very hard to hedge for the currencies. But as I said, Vietnam though is one of the most stable currency in the last few years. Actually, in this year, the VND gained against US dollar. So because the number of FDI came into Vietnam, they bring a lot of US dollar. And that's one thing very really surprises is the remittance. So even though the COVID-19, but the remittance from Vietnamese who living overseas, they spend a lot of money. back to the country. So it helps the country to balance the currencies. Yeah.
Okay, then another question: are your funds denominated in local currency or US dollars? Are there currently any restrictions to currency exchange? So I can answer that quickly. Both are denominated in US dollars. In Uzbekistan, there are no restrictions on currency exchange. We are very proud. We were the first foreigner who repatriated money in 2019 when it was liberalized. There are some restrictions in Vietnam, but since we are investing in the equity market, it's not a big concern for us. Then, okay, here also, the fund size are still quite small. Uzbekistan, 12 million. Are the funds getting closed in case there is a not given size reached within a timeline, or how is this risk? So we started the Uzbekistan fund with 3 million 2 years ago, and we had continuous inflow. And given the size of the stock market, we are really happy with the development, because there's not a question about capacity. So I mean, if you would have gotten 50 million, it would have been nice, of course, 2 years ago, but there would have been probably also some kind of issue, and stock market would be much higher. So we are happy with the development of the fund right now, and we see more interest. So we expect a gradual increase in fund size, and right now we would say the capacity is somewhere 50 million US dollars, but that kind of change if these big companies are going IPO. And then Uzbekistan, can you comment on demographic trends, growth rate, aging population, and how fits this into your investment thesis?
Sure. Probably the average age of the country is roughly 29 years. The population, again, it's roughly 35 million, and it's growing at about 800,000 per year. It's a trend unlikely to slow down for the time being. So again, this is going to lead to continued cheap labor and, in due course, rise in consumption in the country. So our focus is to increase exposure to financial services, to benefit from the very young and nascent but nonetheless growing mortgage and loan market, but also to get more exposure to consumer goods related companies.
Then another question: as the Uzbek economy matures, does the fund envision expanding its mandate to allow the pursuit of private equity deals?
No, we'll stay with listed equity. I've lived in frontier Asia for 10 years, and private equity is hard enough in a developed economy, let alone a frontier market. So in Uzbekistan, we'll stay with listed equities.
Yes, I agree. I used to work before for a private equity fund in Cambodia, and it's a different ballgame. And it's like Porsche and Volkswagen. They're two different animals. And what we could do is pre-IPO placements. So if we see potential that the company lists within, let's say, 2 to 3 months, then we would take some position. But otherwise, we would stay in listed equities. Then another one: aside from liquidity, what are the other hurdles for foreign portfolio investors in Uzbekistan? Brokers, custody, commissions, settlement cycle?
We haven't had any issues. It's slow and bureaucratic. There's a lot of paper signing every time you do a trade or whatnot. You have to sign a document from your broker confirming the trade, another paper confirming the commission. So there's bureaucracy in that regard. But the opening process, if you're not there to open an account, you have to do an apostille in all of this. Thomas?
Yeah. Yes. Okay. For Vicente, when do you think Vietnam Stock Exchange will start to benefit from a possible upgrade to MSCI Emerging Markets Index status?
Oh, actually, this is very difficult. Actually, I wish
last question, difficult question. After that,
absolutely, all of us wish it will come as soon as possible. But yeah, who knows in this situation, COVID-19. But with some improvement from the markets recently, include such as liquidity. So liquidity of in Vietnam already improved a lot. And Vietnam is already issued a new law, security law, to say more clearly about the FOL and other supporting factors. So I think it could be soon. But you know, even if it comes late or soon, but I think sooner or later it will come. And when the market is spread to MSCI, yeah, the huge inflow will point to the Vietnamese market, and at that time the stock will come up sharply, I think.
Okay, thanks. And last question to Scott. What do you expect about the planned October 2021 presidential election to impact Uzbekistan's stability?
I imagine it will be very quiet and very peaceful. You know, the president's doing a good job. The members of parliament are moving things forward. Nonetheless, could always be done better in any country, but it's moving the right direction and the country's changing. So it should be very, there should be no surprises.
Okay, great. How they say normally, inshallah. Huh? Okay, this concludes our webinar today. And since we still had some unanswered questions, we will answer them directly by email to the person requesting that. And if you have any further questions, you can always reach us by email. I hope you enjoyed this webinar. We will organize more of these kind of webinars in the future, and we will announce them in our upcoming monthly newsletters. So stay tuned. Good night to our participants in Asia or from Asia, or enjoy the rest of the day and stay safe. Bye.